Are you buying on margin? I want to make sure all of my people out there, especially if you are new to investing, that you aren't falling in this trap and that you fully understand, both sides of the coin when it comes to buying on margin. Everyone frequently likes to talk about being able to use margin for your benefit, but is this really the smartest thing to do, especially with our current market? That's the question you got to ask yourself. And if you are fully aware of margin and what exactly it means, you might second guess, you might reconsider if you want to buy on margin right now with our current market. Now, it could be a beautiful thing. It could be perfect timing. The market might just bounce from here and just run up, or it might continue to kind of plateau and consolidate where we are, or even fall down lower. I don't know. You don't know. No one really knows. So buying on margin might be a smart thing to do or a really, really bad decision, especially with our current market. So I want to dive into this article. Why is buying stocks on margin considered risky? And make sure, again, all of you guys know about it, because it's similar to getting a loan and or similar to credit cards. Using other people's money is something it's a big, it's a fancy, cool term to use these days. I use it here and there, but I don't think enough people speak about how risky it is when you are using other people's money. Because if you're using my money and I need my money back, which might be comparable to a broker issuing a margin call, well, you might find yourself in hot water. So we're going to dive into this article. Like this video if you haven't already. I do appreciate you guys watching this. And, by you liking the video, it does help increase the chances that other people out there who are new to investing will have a better chance to come across this video. So, definitely like this video, smash that thumbs up button. And while you're down there, feel free to subscribe to the channel if you haven't yet and hit that notification bell so you can stay up to date on all of our latest and upcoming video content. So buying on margin involves borrowing money from a broker to purchase stock. A margin account increases purchasing power and allows investors to use someone else's money to increase financial leverage. Margin trading offers greater profit potential than traditional trading, but also greater risks. Purchasing stocks on margin amplifies the effects of losses. Additionally, the broker may issue a margin call, which requires you to liquidate your position in a stock or front more capital to keep your investment. So the key takeaways that you guys are going to want to know about for this article and what we're going to dive into is that buying on margin can increase profit potential. Yes, you can make a lot of money when you buy on margin. However, it also brings greater risk, and leverage exemplifies gains and losses. And one of the major risks to buying on margin is that a broker may issue a margin call. So we'll dive into exactly what a margin call is and some examples, but first we'll begin with the margin history. It is worth remembering that during the boom known as the Roaring Twenties, just before the great stock market crash of 1929, margin requirements were just 10%. That meant that the same $10,000 balance in the account could allow for the purchase of $100,000 worth of stocks. Obviously, that seems very attractive to investors chasing that bull market, unless there is a mere 10% decline in the portfolio. That would, and did, wipe out most investors that used margin. That is one of the primary reasons margin investing was frowned upon for over 75 years. Fear in the long memories of the Great Depression. Margin example. Suppose you have $10,000 in your margin account, but you want to buy a stock that costs more than that. The Federal Reserve has a 50% initial margin requirement, meaning you must front at least half the cash for a stock purchase. This requirement gives you the ability to purchase up to $20,000 worth of stock, effectively doubling your purchasing power. After you make the purchase, you own $20,000 in stock and you owe your broker $10,000. The value of the stock serves as a collateral for the loan he has given you. If the stock price increases to $30,000 and you sell it, you keep what remains after paying back your broker plus interest. Your proceeds equal $20,000 minus interest charges for a 100% gain on your initial investment of $10,000. Had you initially paid the entire $20,000 yourself and sold at $30,000, your gain is only 50%. This scenario illustrates how the leverage conferred by purchasing on margin amplifies gains. Leverage amplifies losses in the same way. Suppose the stock price decreases to $15,000 and you sell it to prevent further losses. After paying your broker the $10,000 you owe him, your proceeds come to $5,000. You lost half your original investment. With traditional investing, however, a price drop from $20,000 to $15,000 only represents a 25% loss. And then there are margin calls. Another risk of purchasing stocks on margin is the dreaded margin call. In addition to the 50% initial margin requirement, the Financial Industry Regulatory Authority, FINRA, requires a maintenance margin of 25%. You must have 25% equity in your margin stocks at all times. Your margin agreement with your broker may call for a higher maintenance margin than FINRA's minimum. If the value of your stock decreases and causes your equity to fall below the level required by FINRA or your broker, you may receive a margin call, which requires you to increase equity by liquidating stock and contributing more cash to your account. Returning to the example above, assume your broker's maintenance margin requirement is 40%. Because you owe your broker $10,000, a drop in the stock price from $20,000 to $15,000 decreases your equity to $5,000. That is only 33% of the stock price. You have fallen below the 40% minimum. If you cannot or choose not to contribute more capital to cover the margin call, your broker is entitled to sell your stock, and he does not need your consent. So, my friends, buying on margin can absolutely be a beautiful thing. If the market goes up, if you are making the right decisions when you buy those stocks, if you're buying the right companies, if you buy them at the right time, yes, buying on margin can be oh so beautiful. But on the other side, the grass is not always greener. And as we just covered, as we just mentioned, not only do you have to worry about potentially, dealing with the loss of value that a stock might see with it just going down, but on top of that, you may have to deal with margin calls from your broker. And as we mentioned, you're not just dealing with the fee of how much you borrowed, but you also have to you also have to pay back interest. So, hey, I just want you guys to be to make good, smart moves. I've found myself in a situation or two where it was like, ooh, luckily it wasn't much money that I borrowed, but you still just don't want to find yourself in a similar scenario where you are down quite a bit. The market might only continue to go down. Then there's a margin call on top. I mean, it's just not fun. And of course, this isn't legal or financial advice. However, especially with our current market, if you are going to buy stocks on margin, I would consider waiting until there's a bounce. Don't buy stocks on margin in a dip, because you don't know when the dip will end. You don't know if the dip is the beginning of a bear market and a stock market crashes on the horizon, and you just might think, oh, it's a little bounce we're going to experience right now, so I'm just going to buy this little dip, and I'm going to buy it on margin, thinking that, you know, you don't have the money, but you want to get in. I know how tempting it can be. You want to get in. You see all these cheap prices. Oof, it is so tempting. I get it. Trust me. I'm like right now I'm killing myself that this kind of happened last year as well, and I'm just killing myself for not having more money on the side and being smarter with my money. And this channel is all about managing and growing money, but it's hard to grow your money when you can't properly or effectively, efficiently manage your money. And if I had better management skills, I mean, I'd be much further along than where I am right now in life. But I continue to work on my money management skills, and I continue to improve them because I am actively working on them. And yes, again, I'm tempted to buy on margin right now to get back into the market like heavily because of all these cheap prices that we're seeing with stocks. But it might not be the smartest move. It might not be the best decision at this point in time. And only time will tell, right? If you are buying on margin, let us know. Leave a comment down below. I'm curious to hear, what are you buying? You know, and maybe, you know, there are some, I mean, there are great opportunities out there. But again, you just don't know when the market's going to fully rebound and continue to run. We know we're due for a correction. So could this be it? Maybe, maybe not. So buying on margin, for me, if you're asking my opinion right now, I would say hold off. I don't encourage it right at this point in time, at this moment. But at the same time, if you know you got more money coming your way, if you know, maybe you're self-employed, you have a big contract that's coming, you just signed it, and you got money that's going to be landing in your pocket in a week, 2 weeks, in a short period of time. All right, this might not be a bad decision because you'll have the money to support you in case there's a margin call, in case things dip, and you want to get out of a stock. That's a different scenario. But this is similar to credit card arbitrage, in which you're like, hey, let me go get that cash from my credit card, my credit line, and I'm going to go invest it with the hopes that you're going to see greater returns. But that's not always the case. And I just want to make sure, I want to be optimistic and help encourage you guys that, yes, you can make a killer doing those things. But I also want you to be mindful that you can also potentially lose pretty big, pretty badly. And I don't want to see anyone, struggling or suffering more than what they need to, especially during these times. So I'm going to wrap it up there. Feel free to comment down below with your thoughts. Definitely like this video if you found this video helpful, informative, motivational, encouraging, and also subscribe to the channel if you haven't yet. Much appreciation for watching. And you guys already know I got to keep it moving, but I'll see you in the next video. Peace.